Welcome, everybody. Steven Sitkowski here. Glad to have you for my Market Insights. It is April the 27th. I've got a whole lot to share with you. We have markets trading at all-time highs, if not at the moment at all-time highs, certainly near all-time highs. The resiliency of this market, it's just off the charts. I could have never predicted where we are right now, given the circumstances that the market is dealing with. We've taken two rate hikes or two rate cuts that were forecasted this year off the table. That should have negatively impacted the market. On top of that, we have a war going on. We have oil prices through the roof. Logic would tell me if you presented me those facts, I'd say, oh, market's down 15 to 20%. We're in correction territory, and instead, we're up almost 5%. It's kind of insane. Want you to know that everything that we do here is for informational and educational purposes only. It is not intended as investment advice. These are just my thoughts and observations. So, what's moving the market? This is a huge week for earnings. So we've got the Magnificent Seven stocks. Of those seven, five are announcing this week. Four after the bell on Wednesday, and one on Thursday. Each one of them individually can potentially influence the market. So there's a lot at stake. Goldman raises oil price targets for the fourth quarter. We've gone from them expecting the price of West Texas Intermediate crude to be in the $75 per barrel range to 83. That's a pretty big increase, and it's because we can't get any resolution in Iran. And that thing's just dragging on and on. The longer it drags on, the longer it's going to take for oil prices to restabilize. The Fed is going to be announcing their decision on interest rates on Wednesday. That's 2 o'clock Eastern. As of right now, they are not likely to change rates. I'll just go out on a limb and say they're not changing rates. They're going to hold rates. Now, what'll be interesting will be to see what it is that Chairman Jerome Powell has to say about the economy or his thoughts on interest rates moving forward. 10-year Treasury, pretty steady, just been hanging in at around 4.3%. Doesn't get to be a problem for the equity market until it goes above 4.5. And then it'll get some people's attention. If it goes above 5, then it's a serious problem. We don't really see that happening at the moment. And oil prices are up today, even though apparently Iran has provided a proposal to the White House, terms under which they'd be willing to reopen the Strait of Hormuz. And I guess Trump is meeting with some of his key advisors, probably to deliver a counter proposal. Who knows, right? There are people at a whole different level making those kinds of decisions, and I won't even begin to speculate on it. Last week's heat map, pretty good. You can see the pocket that did extraordinarily well. This, plus some of the cybersecurity stocks. Amazon did great. Oil, there's a big shocker, did really well. What didn't do well? Healthcare. Healthcare didn't do well at all. Financials didn't do well last week. A pullback in some of these industrial names. I'll tell you what's happening. They're getting concerned, they being some of these defense companies. The market's concerned that they could start pulling back. War is good for their business. Peace is not, although, again, without being part of the military, I would think that they're going to have to replenish everything that got used during this skirmish. And the winners are from last week. Intel, I own it, was up 23%. Intel has really sort of changed their whole persona over the last couple of years, and um, the stock shares have reflected that. AMD, Qualcomm up big, um, ServiceNow trying to make a comeback. You know, the software stocks have been so beaten down. Stocks trading above their 200-day moving average. So I don't like this trend. You see that? But it's a hell of a lot better than that trend. So we were way down here. So right now, we have about 55% of the stocks in the S&P that are trading above their 200-day. We really like to see that, north of 50%, which it is, but not by a whole lot. Earnings growth estimates look really strong for this year and into next year. And all things being equal, if earnings are going up, the value of companies go up, the value of their stocks go up. So this takes us through 2027 on a pretty nice trajectory. Wouldn't you agree? So this year, earnings on the S&P are expected to go up 12%. There's a lot of analysts that think it'll do better than that, which is a reason why I predicted that we would see double-digit returns this year. And I still think we will. Now I'd be shocked if we don't, because we're going to ultimately solve the crisis in the Middle East, right? One way or another. Oil prices are going to start to come down, which may change the tune of the Fed. And if you've got earnings going up, I think we're going to be just fine. So now it gets real. This is the week. 42% of all the stocks in the S&P 500 are reporting earnings. So this is by far the biggest week of this quarter and a potential game changer. Semiconductor stocks have crushed software. So the problem for software is that there's this concern that AI is going to make these software companies obsolete. Now, the AI companies are telling you that's not going to happen, that they need the software companies. And then you get a company like Microsoft, which is a software company, but they're also an AI company. So that was down around 350. I was telling you, there's an opportunity there, and it's probably still there. Intel is definitely back. Year over year, their revenues are up 7.2%. They've got really nice growth rate. They're spending money on AI infrastructure, and the stock might be a little pricey now, as much as it's moved. So if you'd like to own it, personally, I'd probably suggest you wait for a pullback. Market sentiment, much improved over last week. So last week, only 31.7% of independent investors surveyed thought the market would go up over the next 6 months. A week later, 46%, which goes back to something you've heard me say before. Markets are fickle because investors are fickle. People just seem to have this sense that whatever's happening right now is the way it's always going to be. And nothing could be further from the truth. Maybe the greatest investor of all time, Warren Buffett, what did he say? I'm buying when everybody else is selling. I'm selling when everybody else is buying. So when everybody else is all excited about stocks, I'm taking profits. I think it's worked out fairly well for him. Fear greed index is in greed. Now it's interesting, there's this euphoria about the market. Now, obviously, the markets have made a tremendous comeback. They've hit new all-time highs. I get it, but I'm going to keep reminding you we are one negative announcement away, right? I'm thinking of Iran, that changes everything. So do not get complacent. The future of interest rates, well, if we're waiting on a rate cut from the Fed, we could be waiting a long time. Coming into this year, we were expecting two rate cuts. Now we are not expecting the first rate cut until September. Not of this year, September of next year. So this is going to have to be an earnings driven market. Now, might the Fed still have a chance to cut rates if we get oil under control? Maybe, but with that announcement from Goldman Sachs, it does not seem likely. Sector performance year to date, the S&P is up 4.58%. That is still mind-boggling. The big winner on the year, energy, obvious reasons, materials and industrials, AI data centers, REITs, flight to safety, same with staples. Utility is a combination of flight to safety plus the power to make these data centers go. Tech's made a huge comeback. Communication services up 2 points higher than market averages. And what has really underperformed consumer discretionary, financials, and healthcare. I'm still waiting for financials to make a comeback. This week's earnings, so mark your calendar, my friends. On Wednesday, after the bell, Microsoft, Amazon, Meta, and Alphabet. And then after the bell on Thursday, Apple. Now, it's not like those are the only earnings. You've got MasterCard coming out on Thursday. On Tuesday, Visa. So we're going to learn a lot about the state of the consumer. Hilton, are people out there traveling on Friday? We have both Chevron and ExxonMobil. Learn how they're cleaning up because of this war. News this week. The big announcements. Well, Wednesday, we've got the Fed announcement. But you want to really watch the news on Thursday. We have our initial jobless claims that'll be announced. Supposed to come out at 215,000. GDP supposed to come in at 2.4%. That would be signs of a very healthy economy. Personal income supposed to grow by 0.3%. Personal spending, they got forecasted up 0.9%. I think that's a little optimistic. But I really want you to focus on the core PCE. That's personal consumption expenditure. And that is the Fed's preferred metrics for determining what's happening with inflation. So that is anticipated coming at 3.2%, which is well above their targeted rate of 2%, which is why I'm telling you they're not going to do anything with interest rates. All right, let's take a look at the chart on the S&P 500 and the VIX. So you can see when the ceasefire was announced, it didn't actually hold, but it was announced. And we thought, okay, well, better days are in front of us. Well, the market's acted like everything's been hunky-dory ever since. Even though it hasn't, but that's okay. So, we have moved off of a 63.40 level, and now we're at 71.75. That's a hell of a move. So we went from the sky is falling to, oh, isn't it a beautiful day? So we'll take it. How about the VIX? This is the volatility index of the S&P 500. We also call it the fear index. So I've got these lines drawn at 13, which is typically the low range, 25, the higher range. And right now we're sitting closer to 13 than 25. So all that is really positive. Well, unless we get any negative developments coming out of Iran, I think we're in pretty good shape, provided we get some quality earnings announcements this week. So that's what's going on. I'll come back and see you next week. Until then, be safe, be blessed. Bye for now.